Hello, this is Patrick White from AA Commodities and Investments from Spencer, Iowa, with a special edition of your market recap video. I guess today I'm going to talk about support and resistance lines and just my thoughts on it, and just how I make up support and resistance for the newsletter, just give you just kind of my take on support and resistance in the markets. So before I get started here, I'm going to start it off with the disclaimer. Just remember that everything that I say here is just my opinion. It's not a specific trade recommendation or anything like that. If you'd like to read the full disclaimer, please pause the video now. All right, so let's jump into a chart here. I guess I picked April lean hogs just because it shows it pretty well. But today we're going to be talking about support and resistance. And what is support and resistance? Well, support and resistance is kind of where the market tests certain levels. It tests certain levels in the market, multiple times. And when the market goes back to that level, it'll bounce off or bounce back through those levels, and we'll talk about those things. So what I look for when I'm talking about support and resistance, so support is where the market's going to go down, where you can buy, and you're hoping that the support holds, and that you can be long above that support level, and then you'll get a further rally through resistance, right? And resistance is where the market's going to struggle to trade above. With resistance, it'd struggle to trade above it. It would hit that resistance level and fall off, pretty good. I think the more times that the market tests a certain level, the stronger the support or the resistance is. And there's a few little tricks that can help you, determine support and resistance, and just, see what all the buyers and sellers are doing here. So I pulled up April lean hogs. It's a pretty clean chart. A lot of times livestock's a lot more choppy than this, but, I guess just support and resistance here. I like to look at the candles, the bodies of the candles. Like, in this July, August time frame, I just, sit here and ask myself when I'm doing support and resistance, where does price not want to go? Where does it want to go? Where are we kind of hanging out, for lack of better words? And I just noticed like this, July, August time frame here. And kind of the 62 level. So that's kind of a hint too. A lot of times support and resistance are around, somewhat even numbers. Like for example, $4 in corn is a pretty good resistance level, usually. So basically, yeah, so I look at these candles and I just look to see where they are testing above and failing. So like when they rally above here to 62, and then they fail down and they close lower and go back and test these lows, that would be resistance in there at 62. We tested it again here on, July 26th of last year. We tested it again here 1, 2, 3 times, then we got a break above it, right? So that, that 62 level is, that 62 level in July and August last year was, a pretty strong resistance point until we broke above it. Well, what happened when we broke above it? We got our close on the 15th of August there, and that gave the go-ahead for the rally. Basically, all this choppy, supportive type action was done, and they went above resistance. And so they're going, when they go above the resistance level, they're just looking for the next area of resistance where they stop. So going along with this move here, the next area that they kind of struggled with was the 67.75 to like the 68 level. And sometimes these support and resistance areas are zones. It's not like to the tick. It's not, to a certain exact price. It's just kind of a general zone, because the market's most likely not going to test, the same tick. So anyway, so we went up above 62, and the market really didn't see any resistance, until the 67.70 to 68 level. And that they were basically dogging this high. They were going to test this, this high up here that we made on July 3rd. So, as we go down, we support, we go back up. We've got resistance. They're looking at, the 3rd of July on this day. It was a significant high before we went lower. And then there was another significant high up here at 68.5. And so this level here, this 67.5 to 68, they really struggled through. But once they got through it, then they go right back down to this $68 level, and they test it 1, 2, 3, 4, 5 times, and they just keep going above resistance. So I'm just going to stop the video here just for a second. So the support's at 68. Just think to yourself, where would the resistance be here after the 27th of August here, this candle right here? Where would the resistance be? Well, I guess from my perspective here, the resistance would have been towards maybe this high over here on the 18th of April. Just the market really struggled with the $70 mark. So that's kind of like the $4 mark in corn. When we get up to these, even number levels, like $70, you're going to see some selling there just because that might, hit a lot of guys' profit targets and things like that. That $70, 70 and a half level would be good resistance in there. We dogged above it. We made another resistance level in here at 72. So we tested that 1, 2, 3, 4, 5, 6 times and closed below there. So that 72 level was good resistance. And then the market went down and tested right back up there. Got above 72, but then, look out, they got to close below 72 there. So the same thing kind of goes for just, the support side of things. So you want to look at like significant swing highs and swing lows as well, when you're doing support and resistance. We had this significant swing low here. What level, ask yourself, what level were they looking at, were the traders looking at when they made this low? Well, they were probably looking at this level over here, which also corresponds, with over here, these, this support level. So basically this $65 level, and again, that's another even number, $65. So where's the market probably heading if we support here? Well, back up to $70 to $72. So yeah, the market went right back up to 70 to 72, and then goes right back down to test the 65 and a half level again, and it's a double bottom here in this chart, and then it goes right back up to test, well, the 72 level. We got one day above there, and then after that, the 72 level held here. So and then we saw this, the flood of the down move. So basically what I was looking at in early March here was this 56.30 level. So we had a significant slide down here. I was looking at the 56.30 level. Well, why? We had a gap right here. If you can see, we had a gap right here between basically 56 and a half. So we got a limit lower close that day. We gapped it lower again. And it was just really bearish. Everybody's really bearish. The news is most bearish. So what's going to happen? Well, we're going to rally. So we got this 56 and a half level. We tested it 1, 2, 3, 4, 5 times. And then what happens on this day? This is kind of where it gets interesting. We gapped up on the 4th of March. We gapped up pretty good. Markets, if you look at it, we couldn't get a close above this 56 and a half level in here. Right where the horizontal part of the cursor is. And typically markets gap above and below support and resistance. So like if there's a level where the market's struggling to get through during the day, well, the big traders will come in and they'll gap it above there. They'll set their best bid, $2 away from, the other yesterday's close or whatever they got to do, and they'll gap it above that resistance point so that they get more buyers interested here. So this 56 and a half level was good resistance. And they gapped above there to 57.30. And as you can see here, that just, led us into, gave us the go ahead here for the significant rally higher. So where else, if you're looking at this day, the 4th of March right here, where else could there have been resistance? I'll give you a second. I guess in my mind, the resistance would have been that $58 mark. And I chose the $58 mark because, that was kind of the 58.30 level to the low 58s was the level that they went down and tested once and twice. Again, they tested it the first time on the 11th of February, tested it the second time on the 15th of February. And so then that was your interim resistance level, and then we got our close above there. And notice just how the market just kind of slowed down at every point. Here's some good resistance here. They tested that level out about 4 times. We had a day where it went down and then went right back above there. So then we had resistance above resistance here at the $66 mark, which is mostly in line with these lows here at the end of December. And then we had resistance above 68 to 69. And that was just fading these two highs up here. And now, where do you think the resistance is? This is being recorded on March 18th. I'll give you a second here. Where do you think the resistance is for April hogs here? Again, there's really no right or wrong answer here, but I would peg resistance in there at the 72.86 level to 73. And I guess, yeah, we had resistance at the 72 level as well. So I'd think like your interim resistance level would be that 72 mark, and then up to 73 there. So, and that would be a new contract high for hogs, as you know, as everybody knows. The African swine fever hit China pretty good here. They've lost as many hogs as the U.S. produces. So we'll see what goes on there. But I think kind of an interim target here would be that $73 mark. So that's kind of all I got here today for support and resistance. Yeah, if you guys have any questions or anything, feel free to give me a call at 712-262-7606. I do have a daily newsletter that I send out at 6 a.m. And it's mostly on the grain markets. But, you know, you take a look at that. Check it out. I got a cash grain selling system. Yeah, if you guys have any questions on it, just give me a call. Thanks. Bye.